Right, this is swing trading with, well, day trading, swing trading, doesn't really matter. Swing trading is swing trading options with no stop loss. If you look at the 124 down the equity at the bottom, you'll see there's 124, and it will start moving soon. It will start moving because it's these are stocks options on the New York Stock Exchange, or the one in the States. Yeah. You see, I've got open positions, 7 positions, and it's just stuck there. Nothing's moving. Like it's just moving. Like the top, the available is like. Now it's started to move, right? Yeah, they've started to move now. There you go. I just saw the and the market. This is the market open in the States. Well, it's not. It's 10 minutes behind the States. The market open is like 2:30. But the options start to actually change about 10 minutes after, about 8 minutes, 10 minutes after the market opens. So this is it now. So people worry about swing trading with not using any stop loss. And yes, you have to always put stop loss in. I'm always going to say that because I don't trade with stop loss, but always use stop loss. Yeah, I just trade the way that I trade, and I'm comfortable with that. See, like that's now. So that's 2 minutes. It's now 22, 23. So the market's been open 10 minutes in the States. So this is the UK. So in the UK, it's 4:30. It's 23 in the UK, and the balance there. So I've got options, which I put in my previous video. You see, and they're in this now, but I've made sure because there's still live trades. But you can see the options. So the balance there is going from, it was 124, whatever it was. But when you're trading overnight, you have to leave the balance like that there. The available. Okay, this is a practice account, so it's not a real balance, but you have to leave available balance. So let's just say that the stock market halved in value. It wouldn't, but well, let's just say your stocks halved in value overnight. So you lost 50%. Your balance would drop, and it would use your profit and loss at the bottom, P&L, would increase. Your equity would decrease, and your account would absorb the available. Yeah, above the equity, the available. Yeah. So that's almost. So your available would decrease, your balance would decrease, which would use your available, absorb your available to absorb the loss, the financial loss, if your your trading balance went down. And obviously your profit and loss would be negative in a higher figure. But that has now been, so okay, what's that? It's made about 400 quid, 500 quid, if it was for real, yeah. Off of so on that 125 is 125 is 12.5. 12,500 is 10%. So 1,250 is 1%, isn't it? I think. So you'd have to see that would have to be somewhere near 127-ish, 126, something like that. 126-ish to be 1%, to make 1%. Now that balance, see, it's the stocks the options that I've got. I've already bought during the month and made a profit on some of them during the month, and then I buy took the profit too early. And this now is what do you call it? I can hear the background noise. You see, that's all. So at the moment, it's going up when it's hovering. So you won't really know your balance. What's it? It's 2:45 now. You won't really know until 4 o'clock what it's going to do, because there's people now, because it's coming back down again, right? 124. But this is trading with none of those 7 positions have got any stop loss on them, and the market's been open all week. Yeah. Oh, so it's we had all weekend for market activity to go up and down, sideways or whatever, and that's pretty stable. That's pretty steady, isn't it? It's not doing anything. It's not. But you can lose. That said, it's not. It's quite easy to actually lose 20 on that. I'm saying on a balance of 125, for example, using this, you can easily lose 30 grand. Just logging your account, there's 30 grand gone, which is, I don't know, 20-30% or whatever, easy, comfortable. And then it could not do anything, and it could lose another 20% tomorrow, comfortable on whatever it left. You could go down quite easy. But then again, when was the last time you see a stock just go all the way down permanently? Usually it goes up and down when it goes down, doesn't it? And if it goes up and down when it goes up, whichever which direction it goes in. But it's usually got a certain set of given parameters by which it operates with, and this is just swing trading options. So it will just float, do what it does there. I've got nothing. I'm happy with the stocks that I've got, with the positions that I've got, my open positions. I'm not really fussed what they do. They're currently all in negative positions, so I've lost, as you see there, I've lost nearly 9.5 grand. I've got 2 days. So today, which is the whatever it is, it's 1446. So 1446. 1446. It's the 14th. So my options will run out, I think, on the 16th. That's all day today. So I've got Monday, Tuesday, and they'll close. They'll expire Wednesday evening at 9 o'clock. So will it go less? I reckon within 3 days. It's early. It's like Monday morning in the States, isn't it? So this is like a Monday morning, even though it's like 2:30 in the afternoon. So anything, it's just like people are selling their shares, people are buying shares, people are setting their stall out effectively for the week, buying what stocks they're buying. If they're swing trading for the week or whatever it is, or day trading, so they're just buying, seeing what the market's doing. See, it's not doing anything. So this is stop loss. Yes, it can do a lot, but as long as you know how to trade it, as long as you know how to trade your portfolio, and know that if it did do that, you'd have to probably close some positions or increase your available to absorb any financial loss or upside or whatever. But as long as you're in charge, whatever portfolio you create, you're in charge of. There's no, but you have to trade confidently. You can't be panicking about certain trades losing lots of money or whatever. If they do, they do. That's just life. And then you just work your portfolio and balance it, diversify your portfolio if that's the case, how it suits you. You've got to know what you. If you buy land for a living, you should understand what land does and what can grow in land and whatever else. If you buy gold for a living, you should understand gold, whatever it is. I buy textile because it's my cup of tea. This is just an example showing you what happens. It's just hovering. It's not doing anything. It didn't go up and down. It's just undecided as what it's going to do. But at 4 o'clock this afternoon, the first hour and a half is where the volatility is. where it goes up and down all over the place. But then at about 1600 or hour and a half in, which is like 9:30, it's about 11 o'clock in the States. And in the UK, it's about 9:30 in the morning in the States, in the UK. You then see the stock market decides where it wants to go, whether it wants to go up or down or just stay where it is, or dawdle. And this is just an example of people worry too much. Yes, there's times to be worried when the stock market crashes, but it doesn't usually go down forever. It goes up more than it goes down. It just goes. It's just the problems it causes when it goes down create chaos in the markets when it does. But this is just it. So it's not moved. So although there's no stop loss, there was no reason to really put the stop loss in. But then again, this is a balance that I started at 40,000. With you get 40,000 available, and you have no equity, no margin, no profit and loss, and no positions, and you have to just pick them. So I've traded this account from 40,000 to 292,000. There's a video in the videos. You see the 292,000. It will look like this on the screen on the video on YouTube, and you'll see a peak of 292. This is the same account. So I've set 40, 80, 160 is 4, 200 is 5, 240, 280 is 7. So I've 7 times the balance on this trade. So, and that's all without stop loss. So yes, it can crash, but it can also do well. It's just how you actually the person managing the portfolio, the person that builds a portfolio manager is responsible for the losses of it. It's just how you build it, what stocks you buy. You choose the stocks of your own portfolio. As long as you use, this is it. I'm not going to really go too much into what the stocks are, but basically, yeah, if these stocks go bust, the world's in a pickle. So as a rule, generally they don't. But that's just an insight. So now we're back to where it is. So it could still go down to about 110. It could go down to 100, but I'm not really fast because it'll just take 20 odd grand off the available at the top there, and then the equity will be 100 or 95 or something. I don't. But either way, I'm not really fast because these will actually these positions will close in 2 or 3 days. Anyway, it's starting to go back up again. That's where we are. I don't see. The profit and loss there. I wouldn't care if it's minus 30. Not bother me. Just trade the same as I am now. So you've seen that if you're watching this video, I've not bought a single trade, or I've not bought a single trade. Have I? So I've not bought or sold a single trade. There were still 7 positions open. There were still no orders waiting. So that's orders waiting is basically when you actually let's just say you're in the UK, you want to buy some stock in this from positions in a stock in the States, and it's not open yet. You can actually put an order in for that, and it can, when the market opens, it would then actually add the order. But I just tend to just wait and then wait till the stock market opens, and then and that's what happens when you trade with well, that's what happened today when I traded with no stop loss. I don't intend to have any stop loss for the next 2 or 3 days. There you go. Hope this helps you. So yes, it can go pear-shaped, but not always. Adios.